What's up, millennials? In exchange for about 10 minutes of your time today, we're going to take a look at the valuation of Proterra, which is a SPAC that's currently trading under the ticker symbol ACTC. Before we start, a few things first. First of all, I have not done extensive research about this company. Today, we're just going to take a look at the pro forma valuation according to the SPAC and the company themselves. Secondly, don't trust me, verify me. I'm just documenting my journey. I'm not a financial advisor. Third, Stock O'Clock. These are very short 1-minute videos that I post every single trading day with news about the stock market. And lastly, the free Discord channel that I started. It's available at nesami.com/discord. Let's first start with a very brief introduction of this company, Proterra. So this is an EV company. They have various solutions, as you can see on the screen in the investor presentation. They mainly focus on electric powertrains, electric buses, chargers, and energy management systems. And there are two good things about this company, or at least two good things that I thought important about this company. First of all, they already have products on the road. They have quite funny descriptions over here. These descriptions are like the titles of the books that I read when I was like 2 years old. Going to school in Virginia, commuting in San Francisco, going to a park in New York, and touring the ski slopes in Jackson Hole. Okay, very interesting, but yeah, it's good to see that they do actually have products on the road. And as we can see on this page, they also already have revenue, right? They've got $193 million in revenue in 2020, compared to many other SPACs that do not have any revenue just yet. But you're likely here for the valuation, so let's jump into that, right? First of all, the base share price, as always, is $10 per share, as we have seen with basically all the SPACs. They are going to have 240.1 million shares outstanding after the merger. So that means we can already calculate the market cap, pro forma market cap, of course, by taking that $10 and multiplying it by the amount of outstanding shares. And that gives us a pro forma market cap of $2.4 billion. As we can also see, they're going to have an amount of existing cash, 204 million, plus an amount of additional cash on their balance sheets, 648 million. So that in total is $852 million. But they also have $51 million rather in debt. So that leaves us $801 million in net cash. If we then take the market cap of $2.4 billion, subtract the amount of net cash of $0.8 billion, we arrive at an enterprise value of $1.6 billion. So that means that the company itself, Proterra, is worth $1.6 billion. Now, with regards to the valuation of Proterra, we are going to be using a slightly different method from the methods that we have been normally using. For this, we're going to need two things. First of all, we're going to need a revenue. Secondly, we're going to need a revenue multiple, right? So first of all, we can see the revenues over here projected for the next couple of years. Today, we're just going to focus at the numbers from 2021 and 2022, because those are the numbers that they're going to be using to compare themselves with other companies, other mobility technology leaders, and also other similar SPACs out there. Let's first take a look at the revenue of 2021. As we can see, the total revenue of Proterra in 2021 is going to be $246 million. And in 2022, they're going to have $439 million. Now, if you remember, the pro forma valuation of Proterra was $1.6 billion, right? So that's $1,600 million. If we now divide this number by the revenue of 2021, so that's 246, then we're going to arrive at a revenue multiple of 6.5 for the year 2021. So 6.5, keep that in mind. Now, if we do the same thing for 2022, so 1600 divided by 439, that is going to give us a revenue multiple of 3.6 for the year 2022. So we now know that the revenue multiples for 2021 is 6.5, as we see in the investor presentation over here as well. And for 2022, it was 3.6. And now Proterra compares themselves, first of all, with similar publicly traded mobility technology leaders. You can see them all on the screen right now. These are Plug Power, Workhorse, Tesla, NIO, CETL, etc., etc. And they simply compare their revenue multiples with these ones from this sector, right? And they say, okay, if we look at 2021, the median revenue multiple of all of these companies is 16.2. If you look at 2022, the revenue multiple has a median of 10.3. That number, 10.3, is the number that we are going to be using as well in a second. They also compare their revenue multiple of 3.6 in 2022 with the revenue multiples of similar SPACs out there. As you can see, SPACs like ChargePoint, Nikola, Arrival, Excelfleet, Hyliion, etc., right? So again, 3.6 for Proterra. But if we take a look at the revenue multiples for these SPACs, we can see that when the SPAC was announced, it had a revenue multiple of 3.9x. But right now, or as of January 2021, the median of these revenue multiples right now is 9.3x. So 9.3x, that is the number we are going to be working with. Okay, so for this valuation, we are going to take a look at the revenue from 2022, all right? If you remember, that was $439 million. Okay, we now have seen a few revenue multiples of other SPACs, other major companies in this similar industry as well. And we saw that on the low end for the SPACs, we saw a revenue multiple of 9.3x, and we saw a high revenue multiple of 10.3x, right? For the big major technology companies. Cool. Now, Proterra is going to give themselves a slight range of 0.5x to the low end and 0.5x above the high end. So we have 9.3 minus 0.5 is 8.8 for the low valuation, and 10.3 plus 0.5 is 10.8 for the high valuation. So we now have created for ourselves a range of revenue multiples from 8.8 on the one hand, on the low end, and 10.8 on the high end. So let's first take a look at the low valuation, okay? We just decided that we are going to use a revenue multiple of 8.8 for that one, okay? 8.8. And as you might remember, the revenue was 439 million. So that is going to give us an enterprise valuation of almost $3.9 billion. This is the number that I put in my Excel sheet over here as well for the low valuation, right? Now, if we do exactly the same thing for the high valuation, we said, okay, we're going to use a revenue multiple of 10.8 for the high valuation, multiply that by 439 as well, and that is going to give us a high valuation of about $4.7 billion, right? Then we can also calculate a midpoint valuation, which is simply going to be the average between the low valuation of 3.9 and the high valuation of 4.7 billion. So the midpoint valuation, the average valuation, if you will, is $4.3 billion for the enterprise valuation, right? Now, what we need to do to go back to a market cap, to a fair market cap, is to add back the amount of net cash they are going to have on their balance sheet. As we calculated in the beginning of this video, that is going to be $801 million. So if we take these enterprise valuations, we add the amount of net cash, then we're going to arrive at these market caps for the low end, high end, and the midpoint valuation as well. So for the low end, it is 4.7 billion, for the high end, 5.5 billion, and for the midpoint valuation, $5.1 billion. Now we can do something else as well, because we can now take these market caps, divide them by the amount of outstanding shares, and that is going to give us a fair price per share, right? Cool, so if we do that for the low valuation, we're going to arrive at a low price per share of $19.43, for the high price per share, $23.08, and the midpoint valuation, $21.25. The thing is, if we look into TradingView, we can see that the current price per share is $26.07, which is actually higher than the midpoint valuation and also higher than the high valuation. So that might mean that it's currently overvalued, but keep in mind, again, these are pro forma valuations. These are just guesses. No one really knows what is going to happen, but it could be used as a guideline. So the midpoint valuation is $21.25, which would mean that based on the current price per share, we are actually above that and we are overvalued. Keep in mind, however, don't trust me, verify me. Always check for yourself if that's actually correct, because I'm just a random dude on the internet. I'm not a financial advisor. And keep in mind that we have been taking a look at assumptions. We have been taking a look at a certain revenue multiple. We have been taking a look at predicted revenue numbers. So if you change one of these numbers, the entire calculation is going to change as well. With that being said, thank you very much for taking the time to watch this video, and I hope to see you in the next one. Bye-bye.